Today, we're going to be going through some of the key companies for each of those bottlenecks that we spoke about in the first episode. So if this is your first time watching us, I highly recommend going back and watching the first video so that you get a really good foothold of, how I feel about the AI bottlenecks in general.
Hey Alex, how you doing?
Hey James, doing great. How about yourself?
Doing wonderful as well. You ready to talk stocks and more?
Yes, and so today we're going to be kicking off the second video in our AI mini series.
What are we doing this week?
We're going to be talking about what are some of the key companies that fit into each of those bottlenecks that we talked about in the first episode.
Yeah, in fact, I encourage anyone who didn't see the first one, go back and check out that video, and to like and subscribe. That way you can stay aware as we release the next video in the series. All right, Alex. So we're going to deep dive the layers. And in fact, I'll share that with the crew here so they can see the layers. Which one do you want to talk about first?
Yeah, so today we're basically going to be going from the flow of the ground level all the way up to the final layer of software. So we're going to be kicking it off with power and infrastructure grid.
All right. So power and infrastructure, if I recall, is basically how the data center is getting the power in that location in general, and the companies that help support that, right?
That's right. So today we're going to be kind of combining. So we have both the electrical component companies as well as the power generation companies.
Yeah, let's talk about this layer and some of the companies. What are some of the key companies that are part of it?
Yeah, so the first one I wanted to talk about was Constellation Energy, ticker CEG. So they're valued about 91 billion. They have some good growth, definitely not cheap for a utility stock. They're around a 27 PE. Their forward PE is a little bit better, around the 19. They've not been trending well. They're actually down 20 some percent year to date as they've kind of fallen out of grace. But the key thing to know with them is that they are the largest nuclear energy provider. And like we talked about, it's really important if I'm running AI, I need to have very consistent power. And one of the ways to provide consistent power is with an amazing resource like nuclear. That's one way that's very consistent power generation. This makes Constellation Energy really valuable because people are going to want to partner with them to make sure that they're consistent with the way that they're receiving energy in their data center.
Yeah, with that PE, maybe some of the optimism for their success and or their need in the AI build out is kind of baked in. But when you think about nuclear in general, it seems like there's still some regulations and comfort with society to be able to support that. You feel like this is a longer hold and a little bit more volatile?
Yeah, I mean, if you're thinking about a lot of the companies we're going to be talking about today, most of these names are going to be more volatile than your average company. So there's tons of utility companies that could be investing in. This one specifically is tailored to benefiting from AI because of the way that they provide energy. So that's one of the key things to keep in mind. There's way cheaper utilities because some of the PEs we're going to be talking about in this episode are way higher than this.
Yeah, so I know as a little tease, we're going to find out which one of these companies in each of the layers is your favorite. But besides Constellation, what else you got here?
Yeah, so the next one I want to talk about is another utility provider, and it's Vistra Energy, ticker VST. And they're valued about half what Constellation Energy is, right around 53 billion. They traded a very similar multiple, right around 26, but on a forward-looking basis, they're actually cheaper than Constellation at around a 14. So they're expected to have really nice growth right along with Constellation Energy. From a performance perspective, they've basically been flat to down this year. So I haven't been super happy to be in them, but I haven't felt the pain that I would have been if I was in Constellation Energy. Vistra is, again, one of those companies that's going to benefit from power need because they are focused within clean energy sources. So they are the second largest nuclear provider behind CEG. So we need multiple providers when it comes to energy, and Vistra is another gigantic one that is expected to grow a lot with AI.
Do you see any kind of beyond AI build out benefit with that? Because in some ways, they're involved in AI and the build out, which kind of gets them a little bit techy. or involved in tech. But once all that kind of gets to a normalcy, we have all the data centers we need in general. Is this a good diversification as well for your portfolio? If you've been more heavily in specific tech companies, Mag 7, this gives you a little well roundedness. Is that fair thought?
Yeah, I think so. Like these companies are going to be towing the line between kind of safety and utility stocks and then also benefiting from AI. So as the build out continues, again, I believe that we are as a country hilariously underpowered right now for the AI revolution. So these companies I think are going to have massive runway for many years to come. But when we do get to the point where we do have enough data centers, I mean, these companies are just very consistent providers because I mean, everybody hates paying utilities, but guess what? You have to, and these are the companies that benefit from that.
A great thought. So we have Constellation, Vistra. What else do you got for us?
Yeah, so the next one that I want to talk about is GE Veranova, ticker GEV. So this company is more expensive. So they're valued around 284 billion, and they trade at a 31x PE. And what's interesting with this one is their forward looking is actually a 43x. So you can see from it, they're expecting to have some growth slowing as we get into the future. But they've had a really good year. I mean, they're up significant double digits year to date. So unlike the first two we've talked about, you've been pretty happy with GE. The main thing with them is, again, this was a spin-off from the bigger GE company, but this company focuses on power generation, turbines, grid equipment, all of those electrical components that the companies use to generate the power. So again, when I'm building my utility power generation centers out, I need the things that generate the power, and that's where GE Veranova comes into play.
Curious your thoughts there. So if it's a high forward PE, but you get it at 20% down, does that help a little bit there?
Yeah, I mean, this one is really expensive when you just look at the numbers. I mean, for the type of industry they're in that's very consistent, normally you're paying up a ton for AI. So this is the kind of thing where you could easily have this company on your watch list. And if you do have money that you would like to kind of DCA with, this would be a better example where Constellation Energy, I feel pretty good about getting in soon because it's already trading at a discount versus where it was to start the year. This one's ran a lot. So I have to really believe that they have not gotten too expensive to kind of jump in right now.
All right, well, that's great. What's the next one?
Yeah, so now we're going to move away from power and grid capacity and move towards electrical infrastructure. And the first company that I want to talk about is Eaton. So again, this is a company that their ticker's ETN. They are market cap around 155 billion. Their current PE is floating right around 39 with a forward PE of 25, kind of high end 20s. So they are expecting pretty significant growth when we look into the future. They're up double digits as well. So again, I've been pretty happy if I've been within Eaton this year. And the reason why I want to talk about Eaton to start off is they definitely fall within that like boring but critical component of the AI build out. This is the company that makes those components that distributes the power when it's now at the data center. So my power is there. Now I need parts to distribute that power. That's exactly what Eaton makes. So they make the switch gears, the power management, the electrical components, all of those things that are extremely easily overlooked, but critical when I'm building out my data center.
Yeah, that's right. I remember talking about Eaton in a previous video and deep diving them a little bit. That's great to see them here in this bottleneck as a potential company. So that's Eaton. It's exciting. What else in the infrastructure do you have?
Yeah, so the next one to talk through is Quanta Services, so ticker PWR. They're valued right around 100 billion. Looks like kind of around 96 billion. So less than Eaton right now, but from a PE perspective, this is the highest we've talked about so far. They're trading at about an 86 right now, but their forward looking is only a 40. So again, this is one of those companies that we're expecting some pretty significant acceleration in their business already kind of priced in. They are up big this year as well, you know, above 50% on a year-to-date basis. So this whole electrical infrastructure piece we're be talking about, you're going to see that the numbers are up more within these guys year to date. So Quanta is important because you need somebody like physically build and upgrade the infrastructure. So like this is what this company does. Like they actually help you get all of this stuff built. So they're tied to like going through the substations, the grid services, any large scale energy infrastructure project, Quanta can help out with that. So instead of making the components, think about this company as the company that's like orchestrating the project, if you will.
Yeah, and these are huge projects, no less, especially when you look at some of the specs and data center build outs. It'll be interesting to watch how that unfolds politically at the local level with, a little bit of pushback on AI build out and all of the water these places and energy it takes. So it'll be fun to see how that impacts and create a potential some volatility in the space as well.
Yeah, we've seen a lot of political stuff impacting things. I think New York was the latest one where they straight up have banned data center build outs. That's already getting political. So we're going to see, I think it's going to be a really hot topic as we finish out this year and go into next year.
So that's the power grid, electrical infrastructure into the data center. Any other companies you want to point out in this layer?
Yes, so there's going to be one more to point out, and this is
Mm.
Hubble. So ticker HUBB. So this is a much smaller company. They're valued right around 26 billion. PE floating at 29, a forward of 22. So much more in line with some of the power and grid companies that we were talking about. And they actually are up they're only up, mild double digits versus some of the other companies I just talked about. So it's been a little bit of a quieter play, if you will. So this is another electrical infrastructure play. And the reason is because there's a lot of components around utility, electrical components, the connectors, the grid. This is what this company does. So they're kind of like an Eaton in certain ways, but on a much smaller scale. So I guess if you want, it's more of like a
Mm.
speculative version of some of the other companies due to their side.
Yeah, it's interesting. And I imagine as big as our country is and all the data center builds out, there's plenty of room for multiple companies in this space. Obviously, if somebody's primary in the West Coast, they may not be as strong in the East Coast. So it's good to have a couple of these companies identified in the layer to keep an eye out for. I'll be excited for next week when you give us your favorites. Um,
Yeah.
any final thoughts on power grid and electrical infrastructure?
Those are the three that we're going to be talking about today. So yeah, next week when I go through the final episode, I'll be giving you my favorite of those of each group.
Looking forward to that. Next layer, what do you want to tackle?
So the next layer is going to be cooling and thermal management. So the first company we're going to be talking about is Vertiv. So ticker VRT. They're valued right around 114 billion. Current PE of 73, but a forward-looking PE around 33. So again, this is an expensive company for now, but as we look into the future, they're expected to kind of grow in to that valuation. They've had a pretty good year. I mean, they're up almost double where they started from the year. And I think the secret is out, if you will, on all of AI needs cooling, and there's a ton of cooling components that are necessary with all of the heat that is going on within these data centers.
Yeah, that's fair. But speaking about the company, the fact that it's got a lower forward PE is can be compelling and or enticing because it means like, hey, it's expensive, but they got plenty of work and revenue coming in, right?
Yeah, I mean, this has been the primary beneficiary of if I'm building a rack within my data center, I've got my memory in there, I've got my chips in there. I need that cooling component. Vertiv has been the go-to company for a lot of cooling needs, and that's why they're kind of seen as the leader there, and that's why their stock has been up so much.
Yeah, and so this is one of those companies that no matter where your data center is, you're going to order from the companies that can get you your parts, get it on time, get what you need, and this is a good one to identify.
Yep.
Thanks for calling that out. All right, next one on this layer.
So the next cooling company to talk about is Modine. So ticker MOD. They're a much smaller company than Vertiv. They're valued right around 12 billion right now. But when we look at their current PE, 127.
Oh wow.
Their forward, though, is just a 21. So if you talk about the growth that a small company is having and the hyper growth thing, this is much more of a speculative play, if you will, when it comes to cooling. They're up a ton as well, high double digits on the year. So again, you've been really lucky to be in there. But they are definitely not as famous as Vertiv. And I mean, when you think about cooling and heat transfer, they've been involved with other industries, but now they're starting to benefit from AI. So they've been a less direct way, like Vertiv has been as a beneficiary, but they've kind of been brought up right along with Vertiv, and as they've been able to start exploring within AI, and they've been a big beneficiary of that as well.
Yeah, when I hear about that PE, but then the forward PE, you think, okay, maybe not for me if you're a little worried about that expensive price point. But I
Yeah.
think a good counter thought too is like this company isn't going away after the initial build out. You're going to need more cooling, you're going to need replacements, you're going to need that ongoing for new use cases. So could be a long-term play, but it's something to keep an eye out with that expensive PE.
Yeah, and I mean that's a great point to make. And again, when I'm picking stocks from these lists to further research and purchase for myself, I want to make sure that I'm not going all in on some of these, and not only that, that I have a this is just a small portion of my portfolio.
Yeah.
And from a general perspective, I recommend that people subscribe to the channel because we have other videos where we talk about if I am interested in some of these stocks, what is the right percent to invest in each of those. So we have tons of videos that can help out with that.
Absolutely. Absolutely. All right, what's the next one?
So the final one to talk about with cooling is Train Technologies. And this is a much more well-known name. So they're valued around 104 billion. Their current PE is 36, the forward is 28. So kind of seeing mild growth into the future. The next thing is they're up double digits year to date as well. So again, much more of a established name. So when I think Train, you can also think of other things. I mean, they make air conditioning units. They're much more in the whole HVAC space. But again, I need that as part of the cooling that's going on within the buildings within a data center. It's not just about cooling the components. I need climate and all of that stuff. Again, this boring stuff that nobody talks about when I walk into a building, Train is really responsible for a lot of those pieces.
Yeah, it is a small kind of reminder to myself that these are getting a lot of attention because of the focus on AI, which is driving up the stock price, but also can be good companies to look at that there are bottlenecks in the process that you could benefit from when their demand goes up. Is that the high level thought that we're reinforcing here?
This AI build out, and I think Jensen Huang has said it, is going to be the biggest build out in human history. And all of these industries that kind of appear boring on the surface are now having a new pipeline of money being dumped into them. So this is an example of what I think is a super boring HVAC company can now start growing again because there's we got to build buildings. They need it.
It's the picks and shovels.
That's right. Yeah.
All right. Any other company in this layer?
Nope. That wraps up
Okay.
cooling and thermal.
What layer you want to tackle next?
So the next one we'll be talking about is networking
Mm.
and data movement. The first one to talk through is Arista Networks. So ticker ANET. They're valued about 212 billion. Their current PE is a 57 and their forward is a 38. So again, like a lot of the companies in this list, we are projecting growth for the company in the future, and they're going to kind of grow into their to their valuation. They're up low double digits this year. But again, networking is the next thing that comes into play of, I've got my chips, I've got my memory, I'm keeping them cool. Now I need to talk to everything. So Arista is really good at making it so everything can communicate well. So thinking about the all those chips that are in there, they need to be able to transfer energy or transfer signal between them. And Arista Networks is a big time leader within the photonics space.
Yeah, I was going to ask you, is this one of the key photonics companies that help do the travel, either the data through light or glass and some of those new technologies similar to fiber. Is this one of those companies?
Yeah. So this when we're thinking about networking and components, we're going to be talking about photonics and really a lot of those fiber optic cabling that
Mhm.
allows everything to channel. So these are the key components for this business.
All right, what's the next one in the layer?
So the next one, and this company touches multiple, but I wanted to put it in this layer because I think it's the latest beneficiary for this company, Broadcom.
Mm.
So ticker AVGO. This is one of the biggest companies in the world. They're valued at 1.8 trillion. Their PE has been kind of floating all over the board. You know, they're kind of high double digits. So definitely on a current basis, they kind of look expensive. On a forward-looking basis, they're floating right around a 20. So this is a really great value for a high growth company like Broadcom. They've been, up low to right around double digits year to date. So again, kind of there with the market, but have been lagging of late. And again, Broadcom shows up in multiple layers, but the one that I want to talk about specifically was networking and connectivity and the photonics piece.
Mm.
And this is one of the leaders because they're just so trusted. And again, if I'm buying other components from Broadcom, it kind of starts doing everything together because they're also involved with custom chips.
Hmm.
So if I want to partner with a provider to make a custom chip, they're the leader when it comes to those.
Yeah, part of the industry I used to work in, Broadcom was huge for some of those custom chips that they're doing, and it's great to see that there's a little bit of diversification there as they support different aspects of the AI build out as well.
Yes.
But huge company. I happened to enter a position, I think maybe a month ago in Broadcom after one of our videos. And unfortunately, they've been down with some of the competition and everything, corrections in the market. So I need to DCA into them, but I'm about 7-8% below entry currently. So
This past couple weeks, we're kind of entering the depths of hell
yeah,
here. So
yeah,
these are those times where you start learning, am I a long-term investor? Right now is the time.
right. But at the same time, it could be opportunistic, right? It's on sale, if you will. DCA, get in a better price, average that out. And if you're a long term investor, I don't think Broadcom's going away.
That's exactly it. Very much agree.
All right, Broadcom, what else do you got for us?
Yeah, so the final company that I want to talk about in this layer is Marvell,
Mm.
ticker MRVL. This has been probably one of the hotter names that we've had for this year. They're valued right around 165-ish billion dollars. Their current PE is right around a 65. Their forward is 30. So again, we're expecting really strong growth. And this is a company that's over doubled this year. So again, they are really focused on that optical connectivity.
Mm.
And one of the big boons that they've had this year, Jensen Huang, CEO of Nvidia, at one of the conferences, he called them out as the next $1 trillion company.
Mm.
So when that happened, if they're valued around 165, he's calling for, a 10x off of that. And we saw the stock rally really hard coming out of that, but it's also been caught up in a lot of the pullback that we've seen recently there. But I think this is a very strong company moving forward despite the pullback.
That's awesome. That's awesome. Well, that covers that layer. What's the next layer we want to tackle?
Yeah, so the next one we'll be talking about is memory.
Mm.
So again, I think this is probably one of the more popular layers that we've talked through this year. And we're going to start off with probably the one of the biggest to talk about, and that's Micron. So ticker MU. They're floating right around $1 trillion. They were actually above that, but they've kind of pulled back some. So they were even way above that there for a little bit. Their current PE is floating right around a 20, but their forward PE is less than 7. So again, this is where a broader discussion is needed for memory stocks. That a reminder for memory investors, memory is cyclical. So on a forward-looking basis, these companies look really, really cheap versus their current growth. But what's expected is eventually memory will eventually catch up and no longer be cyclical. And this is kind of being debated, but when I talk through this section, you're going to notice the PEs are much lower. And again, Micron has basically tripled this year. So it's already up a bunch, but on the data, it's like, whoa, this looks really cheap still. Well, that's the main reason for that.
And yeah, you're right. Memory has been hot. It was the first next category after the semiconductor category that was, in demand. And with that demand, that creates pricing power, right? Where then they could charge more or raise their prices with that demand, which then impacts that forward PE to make it real shiny
Yes.
or, compelling, right?
Yes.
Um, when you say cyclical, what do you mean by that?
Memory is not something I need on an ongoing basis. When I have my memory installed in my data center, I'm expecting it to be good for a while, right? The only time that I would need new memory is if it failed or if there's more memory that I could then upgrade to that I need for my process. Right now, the amount of memory that's coming out is super fast and people are upgrading to this current level of memory. So the idea of being cyclical is that I'm not going to need new components for a while. But the reason why that's being challenged right now with memory is if the chips keep getting faster, if my memory starts to become the main bottleneck, well, then maybe it's not cyclical and I have to keep upgrading my memory all the time. So this is the thing that's going to have to play out. And if I'm a memory bottleneck investor, that's something I have to believe in is memory is not going to be cyclical. It's actually going to be an ongoing thing moving forward.
Yeah, I was saying because I don't know if you've never heard of Moore's law, but it was this concept of like processing speed doubles every 18 months or something like that. And I don't know if
Yep.
that still applies with how fast technology has advanced, but I think about that as an impact not only on the chip side but RAM as that technology comes in, the ability to store more RAM with smaller RAM sticks and things like that. And then with new supercomputers empowering and new chips coming out, there seems to be this higher than the average person's compute needs at these data centers where maybe that cycle or the cyclical nature of it is going to be at a tighter cycle maybe and keep that demand up. I don't know. I'm speculating myself here. Curious if you have a thought.
Honestly, when you start looking at the run that these memory stocks have been on, that needs to be the case
Mm.
because if not, these things are going to pull back hard because of how much they have ran. I think people are starting to lean towards maybe memory isn't as cyclical as we thought.
Mm. All right, so that's Micron. Who else do you have in this layer?
So the next one that I want to talk about is SK Hynix.
Mm.
And this has been the stock that just came out. So they've been trading on foreign exchanges for a long time, but they recently just had their IPO on the American market.
Yeah.
They are also valued above $1 trillion. So they're kind of like two of the biggest memory players that are out there. From a forward-looking perspective, they're only trading at about a 5.
Mm.
So on a valuation perspective, even though they're valued more than Micron, they're actually cheaper on a growth perspective. They're also the share leader when it comes to memory. And I think with the IPO, it's kind of highlighting more, does SK have more room to run?
Mm.
And how much share can they actually get in the American market? With all the AI data centers, I think this is going to be a really hot company to watch.
Yeah, I'm familiar with them, and they're from South Korea, and they're one of the market leaders that you mentioned, pretty dominant in Korea. They're in that ETF DRAM and also in the Korean ETF EWY. So I was familiar there, but as you mentioned, they just went public in the US market recently. Have they done well in the first few weeks or so?
Yeah, I mean, it's been funny because like they've been up double digits one day and then down double digits the next and then up 20%. They've been caught up in the highs and lows that come with an IPO.
Mm.
But I think having more focus on them will be a beneficiary to memory stocks long term
Yeah.
because if there's a winner within memory, just like a lot of tailwinds, we tend to see the whole sector kind of move up
Mm.
because of one really good company.
Right.
So if anything, there's room once the market stabilizes here that they can help continue the memory momentum that we've seen this year.
So that's Micron, SK Hynix. Who else you got for us?
Yeah, the other Korean company that I'd like to bring up in this conversation is Samsung. So again, they are another over $1 trillion company, but they're not directly available within US stock exchanges, kind of like how SK used to be.
Mhm.
You can only purchase them when I purchase certain ETFs, kind of like DRAM, they're available in there. So if I really want Samsung, that's the way that I have to go about it. But again, they are a huge beneficiary of this because they're producing the same high bandwidth memory that we're seeing from the competition from there. But they also have a more diversified business. I mean, everybody's familiar with Samsung. They're one of the biggest companies in the world, and they make a lot of electrical components across the board. So they have more of a diversified business, if you will, than some of the other companies that we spoke about within memory.
Yeah, and Samsung is diversified, as you mentioned. They also had, what was it last month, a little bit of controversy where their employees went on strike and helped negotiate a nice bonus for those teams working on all the memory chips. It was interesting to see how much of a bonus some of those employees got. But yeah, key market leader in memory. I know there's a few ETFs or international sector funds that have them as well. DRAM being the one focused on memory specifically. All right, so that's memory. Which one are we tackling next?
So next we're going to be talking about chips. And so we're going to get things started right off the bat with the king of AI, Nvidia. So ticker NVDA. They are floating right around 5 trillion. And ironically enough, they're fighting for number one position. Apple has kind of really outperformed of late as Nvidia has pulled back. But, as of right now, they were the largest company in the world. They trade around a 31x currently, and they are basically at sub 20 on a forward-looking basis. So I don't want to go too much into Nvidia. Everybody knows they're kings. They have massive margins. They have huge dollars coming in. And without Nvidia, AI probably would not have had the runway that it's had so far.
Yeah, that's fair. And we have a couple key videos if you want to deep dive Nvidia, looking at their measures and their impact on AI. So I'll share some of that for the group. When we say chips, it's not really just GPUs anymore specifically, right? Is it a little bit more encompassing other types of chips as well?
Yeah, so there are CPUs needed as well, and that's been the big thing that we've seen come up recently is agentic AI. So I create an agent to run tasks for me. When I have an agent running things, the processing power needed is better functioned on a CPU. So this is why we've seen Nvidia launch their first ever CPU, and they're going to be getting tens of billions of dollars already on a brand new business. So this is kind of another tailwind that Nvidia has going for it.
That's awesome. So now they're in the ring with Intel, AMD, and the likes of those companies.
Yep, putting their hat right in.
Of course, that's what Jensen Wang would do, market dominance. But it's all you mentioned the stock. It's always tough to be the top because everyone's coming after you and trying to compete. Or you could have a perfect quarter, the market dips, against your stock price. It's always wild seeing the road with Nvidia. So plenty of content we have on Nvidia. Again, encourage anyone to check that out. Outside of Nvidia, who else you got for us in this AI focused on the bottlenecks as it relates to chips?
Yeah, so next is AMD. So the number 2 player. They are floating around 800 billion or so. They traded a pretty expensive 163 for the current year, but on a forward-looking basis, around a 37. This is one of those stocks that has over doubled this year. So they've been up huge. Even though they're the number 2 chip player, they've been up huge, and that's because they have way more of an established CPU market. And like we've mentioned in some of the other videos, Nvidia can't supply the world on their own. Like there's going to be a need for multiple chip providers, and I think this is where AMD has found a really good sweet spot. It's been up a ton though. So if I'm getting in AMD right now, I know that I'm paying a high valuation, and that is going to be a volatile stock.
Yeah, I was in AMD before it had when it was in like low 200s, and then it shot up. And when I was at about 100% gain, I just was too worried that it might drop, so I cashed it out. Wish I held on a little bit longer because it kept climbing, but that's how it goes sometimes.
It's been on a shocking run.
Yeah.
And again, this is a great lesson for people. If I'm a long-term investor and these dips come in, this is when I am tested. These past couple of weeks have been very testing for a lot of stocks that we're talking about today.
Yeah.
So if you find yourself wavering on owning these stocks, maybe you ask yourself, why do I own them in the first place? And this can be a reminder to either stick in them or kind of readjust my strategy moving forward.
Well, I like how you frame it. Like a lot of these stocks, one, if they're satellite positioned to your core investments, you want to make sure to throttle like the percentage of how much of your portfolio you're putting towards it. We have some great videos as well talking about some of those recommended allocations. But would you say this is more of a satellite position, if you will, within your portfolio, no more than 20%?
That's right. Yeah. So again, if I'm going to be investing in some of these stocks, I'm not going all in. I have a core ETF, something that's usually a broad market that helps stabilize my portfolio. And then I'll pick a handful of these maybe. If I really believe in
Yeah,
NII, I'll pick a handful of these and no more than 20% in a single position.
that's fair. All right, so we got Nvidia, AMD. Who's the third one here we want to raise up?
And I'm double dipping here a little bit, but Broadcom.
Okay.
And again, I want to highlight Broadcom because they play major parts in two very big bottlenecks. So again, the thesis of this video series is the spotlight of AI is going to continue to rotate around. So if I have a company that is playing in multiple, they immediately move higher up my list because the chance of me hitting on them and getting something right is going to happen. So we've talked about Broadcom already. If I play in multiple parts and they're the leader in multiple parts, I have a pretty good chance with Broadcom that I can actually hit on them. And that's why they're really important to multiple of these bottlenecks.
Obviously, probably you can maybe guess in this one who you might recommend in this next video, but we'll look forward to that. All right, so that's chips, semiconductors. We've covered power infrastructure, memory. What's next?
So next we're going to be doing foundry and semi equipment.
Okay.
And so we're going to start off with TSMC, ticker TSM. So again, this is a massive company, $2 trillion. They're valued at 31x, forward looking at 19. They're up double digits. Again, when I think of picks and shovels, TSM is it. This is the company that makes the majority of the world's chips. And not only AI chips, but chips for phones and everything. So when I'm investing in this layer, this is a much more stable layer because they are touching multiple things and how critical they are.
Yeah, I think I mentioned this before, but it also is a little bit diversified being international.
That's right. Yeah. So that they are primarily their main facility is in Taiwan, and the big news coming out of their earnings, which their earnings were fantastic, by the way. I'd recommend going and look them up if people aren't aware. But they had amazing earnings, and they're actually increasing their investment within Arizona by like $150 billion. So they're trying to get kind of away from Taiwan a little bit due to the tensions with China and everything that's going on there. But I like your point of they are a little bit diversified because of that.
All right, so that's TSMC. Who's next?
So the next one is ASML. So ticker ASML. They're valued right around 700 billion, current PE of 57 and a forward of 30. They're up about 66% year to date. So they've been a really good pick this year. You can see they're a little bit more premium. And so you're probably wondering, why are they premium? Well, this is the company that makes the machines that make the chips. So TSM is one of their biggest customers. So as we know that TSM is making massive investments to scale, they need to buy more from ASML. And so because of this, ASML is able to trade at a more premium valuation because they are about as low of a level when it comes to picks and shovels as you can possibly get.
Yeah, and their equipment that they build is not cheap either. We're talking millions of dollars for some of this equipment.
Yes, you can't have, Joe's Corner Store purchasing one of these products. I mean, these are their customers are very major manufacturers.
Right, right. All right, who's the next one?
So the final one on the foundry and semi equipment is Applied Materials. I know one of your favorite stocks. So ticker AMAT, they're valued right around 470 billion, currently a 50x, forward X of about 30s. They've also over doubled this year. And the reason why Applied Materials is so good, again, is that they're super involved in the semiconductor manufacturing process. So they make the equipment that helps with the chips and everything. So they're at the right there at the center of the manufacturing of chips and memory. And this is why they've been big boons this year.
And they happen to be doing the best within my portfolio. So I have a little special heart for this company, but it's great to see what they're doing and a part of this AI build out and a good company to keep an eye on.
Yeah, I agree.
So that's the foundries. What's the next layer?
So the next is the data center build out later. And again, this is where we start talking about the companies leasing the land and the companies building the buildings for the land. So the first one is Equinix, ticker EQIX. So again, they are the ones that they're actually building the data centers and then like renting the space out. So their PE is a 71, their forward is 54. They're valued around 101 billion. So they're expensive because the assumption is that they're going to be able to continue to lease out these data centers for like decades to come. You know, like if I need a space for my data center and I need somewhere to be, Equinix is going to be the main one of the main beneficiaries from that.
Okay, so that's an interesting business model, which probably gives them a lot of leg and room in the future because they got that recurring leasing revenue.
That's exactly it.
Okay, who else you got?
The next one is Digital Realty, ticker DLR. So they're valued around 70 billion. Their current PE is around a 48, and their forward is actually 80. So again, we're actually expecting some slowing for Digital Realty, and they are a gigantic data center REIT as well. So again, they're a real estate investment trust. They own land and get leasing revenue from long-term contracts that are on there. Again, the problem with REITs, though, the ceiling is limited, and the growth will eventually slow as I start getting enough data centers out of there, and the demand for my ability to price my power for the lease will come down over time.
Yeah, and they're front and center in that battle for the politics and a little bit of the AI backlash and where people want their data centers and mad about the energy and the water needed to support those. So they're probably on the front lines of that too, and maybe experiencing some of that volatility.
Yeah, let's hope they have good lawyers.
All right, what's the final one here?
So the final one is Comfort Systems, ticker FIX. So they're valued around 60 billion, current PE of 48, forward of 32, and they're up almost 90%. And the reason is they are part of mechanical and electrical contracting. So if I'm building out data centers, like I need somebody to figure out how everything's going to be put together, and people have specialties in those. And we've talked about all the mechanical and electrical needs that are needed for data centers. This company helps you do that. So you can see they have a ton of demand moving forward, and that's why their stock is up so much.
Yeah, I mean, I've been super speculating, but you wonder how many of these picks and shovels, once we start putting them in space, or get to travel in space and do that as well.
Yeah, I mean, we need Elon to let us know how that's going to go.
Yeah, yeah. I think we're a few years out though, so
I think so.
no rush. Yeah. All right, that's great for that layer. Which is the next one you want to talk about?
So next is software apps. So again, these are applications in companies that AI is the key to what they're selling. The first is Palantir. So ticker PLTR. They're worth about 300 billion. Their PE is floating right around 150. It comes forward at 64, and they're down double digits this year. So again, this layer has not been hot. As we know, the software apocalypse has been real. Palantir, again, I don't think needs much introduction. A gigantic military contracting company, if you will, just involved with surveillance. But I think they have one of the most proven out applications with AI that is known to work. Like their stuff straight up really works well. So they've been really polarizing and politicized from everything. They have a very outspoken CEO, but I mean, you gotta know their product really works well.
Yeah, he makes some big claims, and of course we know a lot about Palantir from our boy Tom Nash is their favorite of his, but they've been pretty volatile. They've been high and low. I'm negative right now with Palantir, but a company to keep our eye on. So that's the first one. Palantir software. Who else you got?
The next is ServiceNow,
Mm.
ticker now, and they're valued around 100 billion. They're currently about a 61 for their current PE. So again, kind of expensive. And that's the theme, is that a lot of these software companies that have AI, they're expensive from there. But ServiceNow is amazing because they are involved with enterprise AI software. So they help with ticketing and a lot of like the CRM stuff that's involved when I'm running my business. They run all of that background. And the secret to their model is when I'm in a ServiceNow contract, it's really hard for me to get out of it. You know, like I'm sold in, this is how I run all those systems. So they have a really big moat, and that allows them to have a little bit more of a differentiation versus some of the AI applications out there.
Yeah, I think that's fair. There was a little worry that AI was going to replace all software companies for every use case. But then, you actually get to the software companies who know their business and know their customers and know what they need. With them just doing what they do and leveraging AI really seems to be that power equation that you're going to see some of these companies come back up. So it makes sense that they're part of the bottleneck, but as an opportunity as well.
That's right. So again, these are some of the names that where we could see very high ceilings
Mhm.
on who is the winner within AI software. Some of these names are ones that you could 10x. Who knows if they hit things right.
All right, so you got ServiceNow. What's the final one? Palantir, ServiceNow, and who else?
Snowflake is our
Mm,
final one.
okay.
So ticker SNOW. So they're valued around 93 billion. Again, this is a really expensive company. Their forward is 99, but they're actually up versus some of the other software names. So Snowflake helps me organize my data at a corporate level. So if I got a bunch of data systems and I need them to be able to talk together and for that data to merge together, Snowflake allows me to do this.
Mm.
And as customers get more complicated and the amount of data I have becomes a bigger need for me to make really good business decisions, this is where Snowflake steps in.
Mm. Yeah, that is interesting. They remind me a little bit of Databricks, who is not public, so you can't buy them unless you're getting in early with a fund like RVI, which you happen to have recently covered. Great video about RVI, the Robinhood Venture Fund One.
Yep.
But that's great. So you got ServiceNow, you got Palantir, and then you got Snowflake for that bottleneck for software apps. What's the next layer?
So the final one to talk through is consumer AI
Mm.
devices. And this one's going to be a little bit quicker because I feel like the main name here is Apple.
Mm-hmm.
So everybody knows Apple. They're vying for largest company in the world. I don't need to go into details about them, but again, how do they get AI going on their phone? That's the question. We've seen Apple Intelligence and these kind of things come into play. They're planning to build on that moving into the future. How does that come to fruition? That's going to be the key question.
Right. So everyone knows Apple and their devices. And of course, you got a few others, like Samsung even makes mobile devices. So it'll be interesting to see how AI evolves and does it go into physical AI with robots? And then those are the devices. Who else do you have in this AI hardware layer?
So the next one is Qualcomm. So
Mm.
again, I know this one close to your heart as well. So they're specialized in helping Apple make those chips to then have AI running on your phone.
Mm.
So again, the idea of Qualcomm is edge AI, meaning I don't need to run in the cloud. I can run native on my mobile device.
That's awesome. Definitely a fan of Qualcomm. And so, who's the final AI hardware company to keep an eye out?
So the final company I want to talk about, and again, they touch multiple layers, is ARM Holdings.
Mm.
So ticker ARM. And they have almost tripled this year, but they matter because they make chips that are competing across multiple different types of platforms, including CPU chips. They have a different kind of structure and architecture versus an Intel that runs really efficiently and especially helps with AI. So you can see how this starts getting integrated, that they can kind of help bring this mobile consumer piece together.
Mm. That's great. That's good. I don't know a lot about ARM, but I'll definitely deep dive them a little bit more, which is great. What I like about this video is you're giving us some companies to look at as potential opportunities as not only the money fluctuates and cycles through some of these layers, as maybe there becomes a pronounced bottleneck that people could take advantage of. Um, and then next week, as you mentioned, we're going to hear your favorites in each of these. Any final thoughts about these layers and the companies within the layers per the build out?
Yeah, so I think we've given you a lot of names to kind of think about.
Yeah.
If there's any of these that stand out, always be sure to do your own research and like dive in more. We'll be doing more next week, but remembering that these are great companies to check out. These are some of the key companies within each of the components, but don't just go out and buy blindly. You know, do your research and really make a clear, have a clear thesis before you go into these.
Alex, thanks for talking stocks with us today and identifying some companies in each of these bottlenecks. I encourage anyone to like and subscribe so you're aware of when we release the new videos. And in fact, if you were interested also hearing what you think, is there a company Alex missed on some of these layers? Other ones that you prefer more than the ones we mentioned, let us know, chat in the video. You can also reach Alex at alextalkstocks.com. That was a mouthful. We'd love to hear from you. In fact, Alex produces a weekly newsletter. It's just another way to communicate, share some more thought nuggets, ideas, concepts, stocks to watch. Just go to the website and sign up there. We'd love to hear your feedback and connect with you there. So, Alex, thanks for talking today.
Thank you. And we'll talk to you here next week to make sure that you stick around for those final calls on my end.
Yeah, I'm betting on Broadcom is one of those that were in multiple layers. Excited to hear
You might have to stick around for next week and find out.
Yeah, can't wait. Talk to you soon.
We'll talk to you then.
All right. Ciao.